What is up? Welcome to the October 2024 market update. Since we last talked, lots has been going on. I know if you live here in Arizona, you're probably really ready for it to be under 100 degrees. I think the end is in sight, and I can actually watch a football game in peace without some kind of political ads running through that. So I think things are really looking up here in Arizona. In terms of the economy and real estate and what we have going on, we're going to get into all of that. We've got some Fed stuff to talk about. We have interest rate stuff to talk about, a bunch of different things as it relates to inventory, all kinds of good stuff. Before we get started, though, I want to just remind you guys, this year we did a charity event for Phoenix Children's Hospital. It's called Kicking It for the Kids. We raised over $10,000. We had food truck and DJs and cotton candy and all kinds of awesome stuff, and it was amazing. We're doing it again in 2025, so I want to get to you early so you can start warming up your kicking leg, getting your teams together, because March 30th, 2025 is going to be the day. We had 2 fields last year. We're getting 4 fields this year. We're making it even bigger and better, so we'll keep reminding you, so don't worry about that. But we're really excited to make this even bigger and better and raise even more money for children's this year, so super excited about that. As it relates to real estate, I just looked today. This is the first time I can remember in several years where we actually have over 20,000 active homes on the market. So we are seeing a little bit of an increase in inventory, and it's been doing that very slowly. And again, it's not a big increase from last month. It's just an incremental increase, but it did push us over that 20,000 inventory. So just psychologically, something to keep in mind. The good news is if you're a seller, the sales actually went up also. So we actually have a few hundred more pendings than we did the previous month. So overall, our market hasn't changed a lot. We've just seen a little more sales and a little more inventory, but it's balancing out. Ultimately, if you have a good house in a good area and it's priced right, it's selling. It's probably getting multiples still, and there's still tons of demand. If you back up to a busy street or under a freeway overpass and you want 100,000 more than all the neighbors, it's probably sitting there. And we're seeing quite a bit of both in the marketplace right now. So if you're thinking about selling, it's just important that you get with somebody that really understands the market, a professional, whether it's us or your trusted agent, and really go through the comps and make sure you understand what's going on in your specific market so you can get that home priced right and still get it sold. There is plenty of buyers out there. Since last time we talked, we had a Fed meeting, we had interest rates come down a half a point, which was a big surprise. And I think a lot of people thought interest rates for mortgages were going to come down also along with that. But if you remember, we had talked about rates coming down ahead of that meeting. Well, what actually happened once the Fed lowered the rates is those rates were already priced in. And so we didn't really see a drop in interest rates from the actual Fed meeting. It happened ahead of it. What's interesting about that is since the last market update that we've done, a whole bunch way more jobs than anybody was expecting were created. And what that did was it moved the 10-year treasury yield. And we've talked about this a million times. As the 10-year treasury yield goes up, so do interest rates for mortgages. And so actually what we've been seeing is mortgages go back the wrong direction since the Fed meeting because the treasury yield's going up, the employment jobs numbers are strong. And what happened is most people thought the Fed was going to cut another half a point at their next meeting. But because these jobs numbers were so strong, and actually right before we got in here, what they call CPI number, consumer price index numbers came out, and those came out what they call hot. So higher than expected. So inflation stayed a little higher than what people were thinking. And so because of that, now everyone's thinking that 50 basis point that they were hoping for from the Fed's probably off the table. And so I would say at least for the next 30 days, we're going to see probably interest rate stability. Unless we get some other numbers that really cause the Fed to worry, I think maybe we're going to get a quarter point at the next meeting. We may not even get any, but I would say my money's on a quarter point for the next meeting. So we might see some slight interest rate improvement ahead of that, but it's not going to be a big improvement like what we've been seeing. And again, we've been creeping back the wrong direction, so it might just drop it back down to where it was a couple weeks ago. What's interesting is how many people are filing unemployment, and that number was higher than expected. So if you're confused, so is everybody. I don't think any economists even really understand what's going on because the consumer seems really strong still. it seems like the country's adding jobs, but then the unemployment numbers come out and then they do what's called revisions. And so the last several months, the numbers have been really good, but they've gotten revised down the following month. And so where the economy really is, I think, is confusing a lot of people. And I think that's why the Fed is trying to go very slow with what they're doing, because if they lower rates too much and the economy is stronger than kind of what everybody's thinking, it's going to be very inflationary and we're going to see prices spike back up because demand will outpace supply again, which is obviously what happened during COVID. But if the economy is weaker than we think it is, then obviously, that could cause other issues, which might make the Fed have to lower rates more. And so I think before they're making big decisions, they're trying to just go very slow and see if the data will actually start telling them what to do. And I don't think right now it's exactly clear. So if you're feeling that way, so is the Fed, so am I, so is probably everybody. So the question we're getting right now a lot is now a good time to buy? Is now a good time to sell? If you're a buyer, the good news is there is more inventory than there's previously been. So you're gonna have more choices than you've had before. And sellers have been willing to maybe make a little bit more concessions or, lower the price a little bit and those kind of things. If you're a seller, the good news is if you price your house right, it's still gonna sell. We're still getting contracts on all our listings. So it's a good time to do both. We're really in a pretty balanced market right now, and there's still demand and supply that are pretty close to matching each other, which really is great for everybody. So I do think right now and through the holidays, we're gonna see really, really strong, balanced market that doesn't get too far in one direction. We've got an election next month. Obviously that can change things. But for right now, I think, status quo's good for us here in Phoenix. Ultimately, we have strong job growth. We have a really robust economy here, and we're spread across multiple industries. So I'm feeling really good about where we are here in Metro Phoenix right now. So if you have any questions, if you have any concerns, if you want to run through specific scenarios with us, please reach out. We'd love to talk to you, see how we can help, any advice we can give you. Until next time, have a happy Halloween and hope you're off to a great fall, and we'll see you soon.